Good morning, this is Mayor Valensky with Driving Markets. I'll give a little bit of a caveat, which I haven't done for a while. It's quite important that anything said on this particular production is an opinion only. Alright, you don't have to act on it, you don't have to follow it. If it does go well, my opinion, then great. If it doesn't go well, then I'm sorry, but the intention is for you to make money, not to lose money. Okay, so let's just go over a little recap of what happened yesterday. So in the morning, the European markets and the US futures were all up. All looked great, everything looked rosy, everyone's ignoring all the facts on the ground. They're ignoring the economic facts, they're ignoring the pandemic facts, they're ignoring the pandemic worries. And everyone's just buying. So I issued a broadcast yesterday that everyone's at the shops. And as the US markets opened, everything started coming down significantly. Why? Couple of things. Number one, Boris Johnson made a significant comment in his broadcast on Sunday. There's going to be a tidal wave of sick. A tidal wave. That's quite a extreme expression, but that's what he believes. Also, scientists in the UK believe anywhere between 20,000 and 75,000 people could die as a result of Omicron. So there's different opinions, different views around the world. You take the pandemic fear and you take the economic impact of the pandemic fear, and you've got a market going down. Added onto that, you've got today and tomorrow the Fed chair Jerome Powell and the Federal Reserve are meeting up to discuss interest rates and discuss also the tapering of the stimulus package that was set up around about 2 years ago, the beginning of the pandemic. So they're going to taper the economic package, coupled with the fears of the pandemic and Omicron and Boris Johnson's tidal wave. Then you've got a lot of fear factors. So let's go over the trading aspects. What you've got is the market is some days going up and some days going down. The general trend, just to let everyone know, is for the markets to go up because there's a lot of liquidity out there. However, short-term trend, you could see a lot of volatility in the markets going down. That's why when I say to you trade small amounts with enough money in your account to ride out the storm. Why? Because even though on one day, 2 days, 3 days a week, the market moves against you and therefore it looks like you're losing money or you are losing money, if you have enough money in the account, you can ride it out. And guess what? The market will come back down to where you opened your position at. Or if the markets come down, the market will go back up to where you opened your position at. So it's very much a matter of trading small amounts with enough money on the account. This can be seen over and over again over the last few months, where the markets have gone down and the markets have gone up. And I bet my bottom dollar that at some stage over that period of time that went over your position, and therefore you could have made profit and you could have closed out and you'd be very, very profitable. Remember, when you're looking to make profit, always make profit on the percentage return, not on the absolute return. What does that mean? The percentage returns quite simply means that if you're making 1 or 2% or 3% a week, that is great, but in absolute terms that might only translate into $5, $10, $15, $25. Therefore people say, traders say, what's the point? It's not worth a lot of money. Oh, there's no point, just keep it open, and they end up losing the money. So always trade on percentages, don't trade on absolute. Absolute is the number you actual make or lose. Always trade on your percentages. You'll be much better off, and at the end of the year you'll see yourself should be profitable if you stick within the guidelines that I'm giving you here, which is trade small, have enough money on account, put on wide stop losses, put on take profits, use your percentages. So I'm giving you all of the necessary weapons for you to deal with these markets, because they are vicious, they're violent, and you've got to be very, 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 very prepared in order to cope with all of the ups and the downs, mentally and financially. Of course, mentally has the biggest impact. What do we expect to see further? Well, as long as the Omicron pandemic is an unknown, then you're going to get volatility, and as long as there is fear of an increase in interest rates, you're going to get volatility. So just be aware of those two factors. Haven't really got much else to say because we're drawing up to next week. The markets more or less will go into shutdown or very slow pace up to Christmas and the New Year. If you need to get hold of me, contact me on LinkedIn. If you want to contact me on WhatsApp, YouTube, Instagram, Valensky Mayor. What else can I tell you? If you need any help on trading, then please give me a call. Contact me. I'm more than happy to help you set up a trading account. And yeah, be careful out there. Be well, and speak to you soon. Mayor Walensky with Driving Markets.